It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm National Underwriter for Old Capital, Paul Peebles. And joining me today, as always, is Michael Becker.
Hey, Paul.
So we want to always engage the smartest guy in the room, Michael Becker, who's done over 4,000 apartment units, raised tens of millions of dollars worth of investors' equity, and put transactions together. So we want to go to the smartest guy in the room to answer the questions. And here's another question for Ask Mike Monday. Mike, what can I expect when a building catches on fire?
A lot of pain and frustration usually, but in my experience, if you own apartment complexes or enough of them, enough units long enough, you're going to have a fire. It's just kind of an inevitable part of the business when you have that many people living together. Certainly something that is pretty common in the industry. So, first and foremost, what you start with is kind of your insurance. Most apartments have loans on them, and most of the lenders have strict insurance requirements, in particular like Fannie Mae and Freddie Mac. So with your insurance, you'll have a couple components to it. You'll obviously have the property casualty, which will cover the fire, as well as typically loss of rents income, and they typically have even like code upgrade coverage as well. So if you have like an older property and then to rebuild it into the city requires new codes be implemented that weren't in place when the property was originally constructed. So those are some things that are typically covered. So first and foremost, you want to make sure that when you're putting the transaction together on the front end, that you have proper insurance coverage that has, both property casualty will cover your the rebuilding costs, the code upgrades, as well as loss of rent income. So if the property takes 5 or 6 months to rebuild, that you'll go back and be able to recapture that income from your insurance company. So typically what happens when you have a fire, first thing you need to do is obviously make sure that everyone is safe, kind of help the tenants immediately relocate to other units if it's a total loss, and then make sure you file a claim with the insurance broker. And then he'll push it over to the insurance carrier directly. That's usually how it goes. Though what they'll do is they'll assign a insurance adjuster who will come out to your property, kind of do a basic initial assessment along the way. What most insurance adjusters use now, something called Xactimate. So it's like a software program where they come in and they have kind of industry standards on what flooring and cabinets and drywall and et cetera all cost. You kind of get a basic estimate. Usually when we have had fires, we're typically the construction manager of our management company will come in and kind of help us through this process as well. And he'll make sure that we get a full scope. So when the initial scope from the insurance company, make sure that they're taking into account all the things that we'll need to come in and do and try to get as close to an accurate initial adjustment from the insurance adjuster out of the gate. So we want to have a whole bunch of back and forth once we get into it. Once we kind of have the initial look by the insurance adjuster, typically you'll hire a restoration company who will come in and kind of pull out and secure the building and demo what needs to be demoed. So kind of pull out all the wet drywall, all the cabinets that are damaged, kind of just demo it out to basically a shell if it's a pretty big fire right there. And then you kind of, once that's done, you get your insurance adjustment, you can engage a contractor and start kind of putting it back together. Usually along the way, there'll be some level of change orders as you go that you need to address, but that's all should be covered within your policy. And then once the building's complete, you have your certificate of occupancy, you then go back to the insurance company and get loss of rents income. So those are kind of the long-winded version of what's out there, Paul.
Yeah, I think that's important just to kind of talk about on the front end because people, live in different areas or parts of the country, and whether it's hail or tornadoes or hurricanes or flash floods, we never like that stuff to happen, but when it does, it could be an opportunity to upgrade your asset. So you could take a property that was built in the 70s or 80s, and then if you have a fire, one or two of those units, you can update them to the 2017 look. But the biggest thing is you got to let your lender know immediately. So the lender is your largest partner in the transaction, and they're responsible for the distributions of the insurance funds. So make sure that you let them know as soon as you have a fire or a claim that they receive the money. They receive the money because it could be a violation of your bad boy carve-outs if it's a non-recourse loan. That if you take $1 million insurance claim and you try to put it in your pocket and you don't put it into the lender's pocket, you're going to have a problem. So make sure that you don't violate your bad boy clauses. And then also too is make sure you have some additional liquidity in your operating budget for future problems. Every now and then we're going to have a problem, so make sure you keep some additional liquidity.
That's a good point. That, like I said, you'll have loss of rents income, but the problem is in the 8 months or 12 months or whatever it's going to take to get your building fully restored, you're not getting that income. So you will have some short-term economic impact to your operating cash flow. So you need to make sure you always have some reserves sitting aside so you can absorb something like that. If you have 8 or 10 units that happen to burn down, if a whole building burns down and you lose $10,000 a month in income that you're expecting to have in. So that is definitely a key thing to keep in mind when you're doing your capital budgeting and kind of your normal operating budgeting as well.
That's great. So, Mike, thanks for answering the question on Ask Mike Mondays. If anybody wanted to get some further information about how loans are put together, don't forget to put an email together at info@oldcapitallending.com, info@oldcapitallending, and we'll put together our 15-page report so you can review exactly what it takes to get a loan on a multifamily property. Anything else, Mike?
I think it would be great. One of the things we've been trying to make a big push is to get a little bit more visibility in iTunes and Stitcher and some of the podcast aggregators. So if anyone who finds this information useful would be so kind and go and give us a review and a 5-star rating in iTunes and Stitcher, that'd be really helpful for us to get a little bit more visibility out there and try to attract more and better guests to our podcast.
And if anybody wanted to have a short conversation with you, Michael, are you open to talking to people?
Sure, yeah. If anyone has any questions about this or any other topic, shoot me a quick email. It's mbecker@spiadvisory.com. It's mbecker@spyadvisory.com. That's how we go out and syndicate and buy apartment complexes. That's my company over there. That'd be the best way to reach out to me, and I'm happy to have a quick discussion with people about this topic or anything else relating to multifamily.
Oh, great. Fantastic. Mike, thanks for your time. And we look forward to talking to you on the next Ask Mike Mondays.